Good morning and welcome to First Mover, your first global look at today's action in Bitcoin, blockchain, and digital assets. I'm your host, Jen Sanasi, here with my co-host, the Thai Director of Content, Lawrence Lewitton. Lawrence, happy Friday. I hear you, Lawrence. Let's take a look at the markets, starting with Bitcoin. The CoinDesk Bitcoin price XBX index is at 29,868, dipping below 30K yesterday, and then just kind of bumbling along. Let's see if Ether is following suit. The CoinDesk Ether price ETX index is at 1,894, down just over 1%, and looking very similar to Bitcoin this morning. And the DFX CoinDesk's DeFi index is, I believe, up about 1%. Let's see when we get it on the screen here. There we go. I was right. Up about 1.7% at 132. Now, let's take a look at our top story today. It is all about Sam Bankman-Fried and the FTX saga. According to a Fortune article, Lawrence, a lawsuit alleges that Sam Bankman-Fried's brother wanted to use the FTX Foundation to buy an island nation and set up an apocalypse bunker.
Do you remember when King Leopold bought a country? It was called Congo. You know what he did there. Do I need to go into detail? No, you probably learned it in history.
I don't think we need to
white guys with a lot of money think that they could just go out and buy any country south of the equator. It's amazing. They think that that's what they can do with their money. Oh, no, never mind your history. Never mind your culture. Never mind your desire to control your own fate. I'm a rich white guy who made money from crypto from my brother. Here, let me buy your country and own you. Okay, that's great. Wonderful people here. Wonderful people. I'm so excited that this is what represents crypto to the world. Oh, God. Thrilling. Oh yeah, and if there's a global catastrophe, the country with the lowest elevation, 10,000 people. That's where I want to put my bunker. I don't know about you, but my people have problems with people who like bunkers.
Lawrence, I love a good Lawrence rant on a Friday morning. I think
I had enough of these. I had enough of this. Sam, you're watching. We know you watched the show. Sam, crazy. That's just crazy. And it's insulting to the people of Micronesia. It's insulting to the Pacific Islanders. It's insulting to everyone south of the equator. Apologize. Sorry.
We get a new FTX story every day. And Lawrence, it just gets crazier and crazier. Yesterday, I think we learned that the FTX leadership team is trying to claw back some funds from donations that were made by Sam Bankman-Fried, I think to the tune of $70 million under, his vision for effective altruism. This island was supposed to be an island where, according to the article, where effective altruists could all go to the bunker in the event that the world comes to an end. It is just, I am in agreement with you.
It would make it the most insufferable. It would go from being a nice little country to the most insufferable place on earth. Effective altruists packing the place. Oh God.
Let's leave that story there. I'm sure we'll get more developments as the days go on. But Lawrence, we're talking about the markets first this morning.
Yes, we are. And Bitcoin, is, of course, down below 30,000, even though traditional markets kind of boring. But joining us now to discuss it is none other than WisdomTree's head of digital assets, Will Peck. Hey, Will, how's it going?
Great. How are you both?
Well, other than that story we just did, I'm fantastic. Listen, we can't talk to WisdomTree unless we talk about ETFs, because obviously WisdomTree, one of the companies that applied for an ETF. The clock is ticking with you guys as to whether or not the SEC will accept or reject you. And I think it's 5 other applications here. I'm not saying you personally, but you're head of digital assets. I assume you had some role in this. So I got to ask a couple of questions. We saw this rally into 30,000 with the applications. What happens on the outside chance that somebody gets approved? You've had your applications rejected before. first of all, what would make you think that this would work? Second of all, what happens if, let's say, one or two of these go through, one or three or four of them get rejected? What happens to the market? How does it interpret it?
Yeah, I think it's a great question. Look, I can't comment on our specific filing. Obviously, I mean, I think everyone's followed that the big kind of change in some of these current suite of filings has been around a surveillance sharing agreement that's contemplated with some of the spot markets in the U.S. Named Coinbase recently. So, obviously that's been one of the SEC's big concerns is potential for market manipulation. They didn't feel like there was a regulated market of sufficient size that was providing that sort of surveillance sharing agreement with the ETF listing exchanges. And so I think you're seeing a lot of people put in place something to address that. And that's been the change, but it's no crystal ball. You can't really forecast it. From our perspective, we just want to work productively with the SEC, and we think a spot Bitcoin ETF is the right execution for an ETF as opposed to futures in the U.S. market. So, we'll keep working at it. I think it would make a lot of sense for investors who want to get that, but again, no crystal ball and no timing on when that might, get approved or things could change.
So you have Coinbase in your surveillance, correct? And everyone seems to.
Well, as a technical matter, it's the exchange makes a filing called the 19B4 that so our exchange is CBOE, and they've named Coinbase in the surveillance sharing agreement. Got
it. So they're sort of involved. And so, what do you think is going on here in terms of let's get down to nitty gritty on price here. We saw some of the alts obviously rallied with XRP, namely Lumens, Stellar Lumens, which had a nice little rally to coincide with it because same founder-ish kind of sort of Jeb McCaleb, and somebody might have copied and pasted some code here and there. Okay, that's great. Nonetheless, this is, those guys went up, but then you also saw Solana. You also saw Matic, all these other altcoins. They kind of went up. Now they're down kind of significantly, especially over the last 24 hours. What happened?
Well, I'd be pretty clearly that's all related to the kind of the developments in the Ripple lawsuit, which, I can't really comment on like some of the specifics there. I think a lot of the commentary that I've been seeing is that maybe it's not the biggest win for kind of Ripple in the long run, but it gives some, Coinbase certainly felt more comfortable relisting XRP from what I saw. So, obviously that is an interesting development. I think some of the altcoins, rose up from there. That's not really our focus necessarily as a company. I mean, I think certainly in the US, we're more focused on Bitcoin and Ether. That's what we're delivering through our direct to retail offering, WisdomTree Prime, as opposed to the altcoins. So, interesting that they're moving, but it's not really a focus of mine.
Let's talk about the Bitcoin Fear and Greed Index. It's fallen into neutral territory. That, of course, indicates investor uncertainty. What's your outlook for Bitcoin?
It's tough to put a price target on in the near term, right? There's some new piece of news that comes out. I think Lawrence was asking earlier what would happen with a Bitcoin ETF. Is that, priced into the market? And I guess it's an underlying question of how much institutional money there might be out there that's not able to access Bitcoin today. It might actually be smaller than we think it is at some level, right? I mean, Bitcoin's been around for a while. Certainly retail's found a way to get access. And for a lot of retail investors, Coinbase, things like WisdomTree Prime would be great ways for them to purchase Bitcoin as well. So for some institutions, that maybe have steered clear of GBTC in the past, they're interested in a Bitcoin ETF. And I think certainly it could generate retail flow over time. And you'll see it take market share from things like GBTC or some of these trusts that are out there. But I think it's a real question if there's actually that much underlying unmet demand for Bitcoin ETF, or maybe it's just a blessing that gives some more people the ability to come in.
You mentioned WisdomTree Prime there. That's a new app that WisdomTree has launched. How has the regulatory uncertainty kind of impacted the launch of this app in your offering?
Not really so much. I mean, like I said, we haven't been focused on some of these altcoins where more of the securities implications comes. We're just doing Bitcoin and Ether as a crypto assets. I mean, really what's interesting about WisdomTree Prime is blockchain-enabled finance is what we call it, bringing real-world assets on-chain to deliver a better retail financial services experience. So WisdomTree is a big believer in tokenization. We believe it can be the next wrapper for asset management and financial services. And we've been working trying to go through the front door of regulation through things like our digital funds, which are effectively 40 Act registered mutual funds with a tokenized share record, allowing you to have kind of an on-chain financial services experience using these real-world assets for things as basic as U.S. Treasuries, as equities, etc. And outside that digital fund structure, things like tokenized gold as well is something that we've done. So we believe that blockchain can be a better way to deliver financial services. Bringing real-world assets on-chain is something that everyone's been talking about these past few months, and we feel like we're really an early mover here, and we're excited to bring that forward with WisdomTree Prime.
You're not worried about ETH being declared a security all of a sudden, are you?
No, well, look, I mean, obviously, again, no crystal ball on this stuff. I think if you look at the spectrum of digital assets out there, crypto assets out there, I think we're comfortable with it.
All right, Will, we're going to leave it there this morning. Thanks so much for joining us.
Great to be with you both. Happy Friday. Have a good weekend.
You too.
Happy Friday.
Bye-bye.
That was WisdomTree Head of Digital Assets, Will Peck. We're going to take a short break. Coming up, from the runway to the auction house, we'll speak with Christie about teaming up with luxury fashion brand Gucci on a new NFT collection. Welcome back to First Mover. Christie's continues to embrace Web3. The auction house has teamed up with luxury fashion brand Gucci to release a digital art NFT collection that features works from various generative artists, including decentralized autonomous artist Botto. Joining us now is the artist and guardian of Botto, Mario Klingemann, along with Christie's manager of digital art sales, Sebastian Sanchez. Welcome to you both.
Thank you. Good morning.
Good morning.
Great to be here.
All right, let's dive right into this. Sebastian, let's talk about this. NFT markets are down. We're definitely in a way different place than we were back in 2021 when NFTs kind of started booming. Tell us about the partnership with Gucci. How are luxury brands thinking about the space right now?
Yeah, Gucci came to us because they wanted involvement in the Art Tech Summit, which just happened over the past 2 days. And the idea was to create a collection around that with them in collaboration. We've worked in the past together. We brought one of their first NFTs to market, I think last year. And yeah, the idea was to bring generative AI was kind of the original idea, and then we sort of expanded that to just generative systems in general. So the collection it showcases everything that's happening in generative art and generative fashion and sort of everything in between, because it's a real spectrum right now. I mean, there's generative 3D garments and there's abstract generative art that has references to textiles and patterns in production. So my goal and Christie's goal and Gucci's goal was to really showcase all of the above.
So Mario, how does this work? Because of course, the whole idea of going to a house like Gucci is the idea of quality control, of their designers being in full control of the process from the time that they put the pencil onto the paper to the time the work comes out of the factory, and that it's going to meet a certain standard at all times. How does it work then with generative art, where it's almost not quite that kind of control, but almost, it's controlled up to a point, right? That the orders for it are controlled, but then the output isn't. How does that quality control as an artist, how does that happen?
Well, either you have a look at a lot of images and develop a very good taste, and then, you still have to decide, or you use AI to help you with that, which is what we are doing, what I'm doing. So you train a model that tries to develop its own sense of taste and then makes a selection which hopefully is up to the standards. And of course, that is the interesting part. If you are able to do that. If, the art that is created gets recognized, gets sold, of course. And, with Botto, I must say, it seems to work.
Do you think you'll see pushback? Of course, we're seeing now with the strike that's going on in Hollywood right now, where artists and writers and performing artists are saying, "Hey, we don't want to be replaced by AI." It might seem, of course, a little far-fetched given the kind of quality so far we've seen come out of AI, but nonetheless, they're worried that their work will eventually be, at least in large part, several people will be replaced per show, let's say, by what AI can do, and the artistry is gone. Do you get any pushback from people, let's say even within Gucci, that says, you know what, we're really good with quality control, we're really good with what we do, we cannot be replaced by AI? It sort of seems like the two concepts are in conflict. How have you heard anything? Have you gotten any, I don't want to say pushback, but at least some commentary from the people in the House of Gucci?
Oh, I have not, because I'm not associated with Gucci. That's the thing. So I mean, generally, yes, I understand the worries of people who are working in the creative field, because definitely there will be certain tasks and professions be replaceable with AI. I mean, and there's always this thing that in a certain phase, we get awed by these outputs, and maybe do not even realize that they are maybe not as good as what a human produces, but unfortunately much, much cheaper to make and much, much faster. So I believe that, there will be a shift. There will be plenty of new ways of working with it. And of course, ideally, there is kind of people embrace working with AI and add it to their repertoire, what they're working with. But interesting with Botto, so far there has been no pushback. But I definitely, in the general artist community, I noticed that some people are very worried. And so I think if you are a digital artist, you have to be more worried than if you are working with actual physical media, because our appreciation for craftsmanship will not go away so quickly. So I guess we might have a short phase where AI is very fashionable, but in the long term, I believe we will still kind of see the value in human labor.
Sebastian, regulation has been kind of the theme of this industry over the past, I don't know, well, for its entire existence, but especially over the past 2 months. Any concern from Christie's perspective that regulators are going to start looking deeper at NFTs? Have any regulators come to kind of look into how Christie's is working with NFTs, especially given how some other countries are starting to look at these different niches of the crypto space?
Honestly, not that I'm aware of. We're very compliant. We have a very strict policy across the entire department. If you can imagine, we're a very old company, and regulation and compliance has been at the forefront of our business for 250 years. So, no major red flags at this point. Hoping that the government doesn't see NFTs as. Hopefully they allow NFTs and everything is okay, and it's another medium in which artwork can be transferred. Can only speak on the art angle, but that's what I hope. Nothing has happened in terms of red flags and regulation at this point.
So no concerns on your end, Mario. We have to ask you. So we have this decentralized autonomous artist. You've told other publications that your overarching idea is that Botto becomes its own entity. First, can you just unpack what a decentralized autonomous artist is for us, and how this vision kind of comes to fruition for you?
Well, so generally the question is, is it possible with all the technical means we have now to create an entity that is a machine, but we perceive almost like a persona that we kind of see really as an artist. So what does it take to be an artist? That's the first question. What do you have to do? So, Botto is kind of my brainchild, and it consists, I call it a trinity, because you cannot use just an AI alone, because an AI alone does not really have any motivation. So the trinity is the AI, which is the brain. Then you have the community of stewards, of human stewards, which kind of help Botto along developing its taste model by voting on Botto's proposals. So every week, Botto selects 350 what we call fragments, so its works, and they are up for votes, and the community then picks a winner. And that gets then minted on Super Rare and auctioned. And the third part of the trinity is its lifeblood, which is Botto the coin. So in order to join the community, you stake Botto, and that gives you voting rights. And and in the end, like, if a work sells, and that's also kind of an answer to the question, like, what do we do if machines kind of replace our creative jobs? You are part of the artist, and you get rewarded for your voting work, because actually so 50% of Botto's sales get redistributed to the community for voting. And so we get this. And then, of course, Botto constantly learns from what the preferences are, and the community learns also, of course, from the market, because everybody has to start thinking like an artist. So, like, okay, do I go for my personal preferences? Do I like this aesthetic? Or, last week, this one that I didn't really like, but it sold very well. So should we produce more? Should Botto try to get more into the direction of that? So there's a constant dialogue going on, and actually also interesting to evolve, like how the community of humans develops their taste. So it's a kind of inverse cyborg, what I call. So a cyborg is like humans augmented by machines, and we have now a machine augmented by humans. And so far, and of course, as Botto's father, I'm extremely proud that another checkbox down the bucket list of what an artist has to do has been achieved, being kind of part of Christie's auction. So I think Botto is in a pretty good space to kind of be seen as an artist, as a persona.
So it's like a DAO meets art.
Yeah.
Meets Terminator.
Meets Terminator. I was looking for the next word. Thank you. Sebastian, lastly here, any other big luxury NFT projects coming up with Christie's?
Not in the near future. We are continuing conversations with Gucci, so hopefully more of that in the future.
Awesome. Sebastian, Mario, thank you very much for joining the show.
Thank you for having us.
That was Christie's manager of digital arts sales, Sebastian Sanchez, and artist Mario Klingemann. We're going to take a short break. When we come back, we've got a crash course for you in understanding everything you need to know about the multiple spot Bitcoin ETF filings. Stick around.
The State of Crypto is presented by Tron, connecting the world to the power of cryptocurrency.
Welcome back to First Mover. We've got the 411 on ETFs for you. Classes in session for understanding everything you need to know about the spot Bitcoin ETF race. Joining us now to discuss is ETF Think Tank Research Director Cinthia Murphy. Welcome to the show, Cinthia.
Hey, good morning. Thanks for having me.
Good morning. Now, we've seen a flurry of spot Bitcoin ETF applications from multiple major TradFi players, including BlackRock. First, let's get down to the nitty-gritty here. Explain what a spot Bitcoin ETF is.
Yeah, the big issue here that we're trying to solve in the ETF world is that as direct an access to Bitcoin as you can have in a pool type of investment. So today, all you can really access in Bitcoin through an ETF is futures-based products. And so we have been on this race, on this effort to get spot Bitcoin approved, which is basically, if you think about an asset like a commodity like Bitcoin, is a physically backed pooled investment. So a share of that ETF will actually give you claim to the asset itself. So in a spot Bitcoin ETF, not only your performance, your share price is tracking directly the spot price of Bitcoin, but your share actually gives you claim to Bitcoin that should be custody somewhere. Where in a futures-based product, you're just investing, you're in the derivatives market. You just have ownership of those futures contracts. You don't actually have a claim to the physical Bitcoin ETF, physical meaning digital in this case. So the market has been really trying hard to get through the regulatory scrutiny an opportunity to offer investors as direct an exit as you can on a regulated type of investment, which would be a spot Bitcoin ETF.
The question I think some people have here is what exactly, you brought up the differences, but from an exposure standpoint, one would think that a futures ETF would have roughly the same kind of price movement as a spot ETF. And if your goal is, I want full exposure to Bitcoin, but I don't really care about actually, if I really wanted to own it, I'd go out in the market and buy it from an exchange and hold it and do my own custody, etc. So if I'm just looking for that exposure using retirement fund, whatever it is, what would be the big deal about, why does it matter if it's a spot ETF? Why do I care if that's approved? Why don't I just buy a futures ETF and get the same kind of returns and volatility that I would see in a spot ETF?
So there's two things to consider here. One is that a futures ETF, you're actually transacting in the futures market. And a futures, a Bitcoin futures, is a cash settled, daily reference rate of Bitcoin prices. So issue number one, it's not, directly equal to spot price. And the other thing is that the futures on a futures portfolio, futures expire. So you're constantly rolling that position forward. You can see, prices go into contango backwardation. You have slippage in performance. So it's not a one-for-one exposure as a spot to Bitcoin would be. In terms of access, if you look at the advisor landscape, I mean, they're looking for that regulated product so that they can, put that in their plans. They can put that in their models. It belongs with everything else as they're building a portfolio. A futures ETF fulfills that role where just directly going and buying Bitcoin for a client, you can't really fit that in the model. So they need that regulated wrapper in order to do that. So the spot Bitcoin is like your purest way to access this, your most direct one-for-one exposure. Where a futures, you're transacting the futures market. Tax treatments are different on a futures versus, the commodity played on a spot price. So there's different considerations there.
Let's talk about the surveillance sharing. This is not the first time we've seen spot Bitcoin ETFs filed, but the major difference here is the surveillance sharing that Coinbase has reached an agreement with CBOE's BZX exchange. Talk to us about what this is. What does it entail? Why is this potentially the turning point?
Yeah, it's interesting because to me, it's almost like the ETF issuers are getting smarter and smarter on their arguments. I mean, typically, stock exchanges, securities exchanges have surveillance sharing agreements that are established with the brokers transacting in those exchanges, which is to just, sniff out nefarious trades. So, it looks for any kind of trade that's either trying to spoof or manipulate volume, manipulate price. And so they have these agreements and they can kind of keep an eye on these trades and reach out to the broker and say, hey, this doesn't look right. Let's intervene. Let's figure this out. In the crypto world, that doesn't exist because, no crypto exchange like a Coinbase, for example, they're not regulated. So the idea of the surveillance agreement with somebody like a Coinbase, it's cool at face value. It's like it's issuers saying, hey, SEC, you're concerned about this kind of thing. You want control. You want to ensure investor protection. You want to prevent manipulation, fraud, all this good stuff. So fine, we will do surveillance sharing agreement. Coinbase agrees, we will do it. But, is it a moot point? Because Coinbase is not regulated by the SEC. So in theory, if they spot something that looks nefarious, who's going to enforce an action on them? Because the SEC, it would be an overreach. SEC has no reach into Coinbase because Coinbase, should Coinbase be under the CFTC instead? Should be under the SEC? There really is no one regulatory body that has oversight over a Coinbase. So the surveillance sharing agreement is an interesting move because all it really accomplishes is trying to address SEC concerns and it pushing that conversation forward, a conversation that has been pretty much stagnant for a decade, stuck on this, surveillance and control and protection conversation. And so issuers are pushing that, saying, here, we agree to come up with some surveillance agreement, but, is it really going to be effective without an actual regulatory oversight, which currently nobody really has over somebody like Coinbase? It becomes kind of a tricky point.
Do you think we're going to get an approval on any one of these applications?
So the next date we're all watching is mid-August, when, there should be some kind of either decision on, I think, the ARC filing or punting, which is probably where we're going to see. I'm sure, the guessing game right now is insane. So there's a lot of people saying this happens this year. I mean, at our firm, we haven't really changed. We don't think this really solves any problems until Congress steps in and decides who regulates all of this. Is it the SEC? Is it the FTC? Is it a combination of both? Are they going to create a digital regulatory site? Until Congress takes a step here, it's unlikely that any of this is truly solved if these concerns are legit, the concerns that, the SEC has been raising for 10 years. So we are looking at, 24 to 36 months before we actually get a spot Bitcoin ETF. We're being on the conservative side. But there's a lot of people betting that because BlackRock is now in the game and they're the largest asset manager and they're well connected, that it could change. But it's anybody's guess at this point.
All right, Cinthia, we are going to leave it there. Thanks so much for joining the show.
Thank you for having me.
That was ETF Think Tank Research Director Cinthia Murphy. All right, Lawrence, we are turning it over to you. The TIE recently conducted a study of over 350,000 unique unlock events involving more than 100 tokens. The team examined white papers, blog posts, vesting contracts, public forums, and private communications for each token. Talk to me about the findings here, Lawrence. Unpack what's going on here.
Yeah, this was interesting, actually, and this is part of a presentation our own Sasha Cavalli gave in Paris for ETH6. Shout out to my cousin Sasha. He's actually not my first; he's my sixth cousin. But nonetheless, don't ask how we know. We know. And Sasha, looked at, and the team at the TIE looked at unlocks. Unlocks are, of course, when a token releases in a nutshell, they'll release a set amount of tokens to investors or developers, things like that. And what they did was they looked at going back, as you said, 350,000 events, 100 some odd tokens, and they looked at it since 2016. So this is going back several years. And what they noticed is something interesting. That when, as a percentage of the average daily volume over 30 days, that if you look at it, and I think we have the first chart here, if you look at it, you see that all of them go down, right? So right before that event, 0 day, which is the day of the unlock, you'll see that in general, the ones that have a large amount of unlocks relative to the average daily volume, over 100%, so double the unlock. That doesn't mean it hits the market. Those tend to fall further than the ones that are small, let's say less than 1%. You'd expect that, say, oh, well, it's a small amount that's hitting the market. But then something interesting happens. The day of the unlock, a few days after the unlock, all of a sudden you see with the ones that are more than double the amount of daily volume, the price shoots up, so to speak, on average about close to 5%, whereas everything else kind of goes up a little bit, right? And then all of a sudden it sells off and it goes down below the price of the day of the unlock. So what does that explain? What's happening here? So what probably is happening from what we gather is that on the day of the unlock, traders are like, oh, that wasn't so bad. Didn't destroy the price. I'll buy a little bit more. So they buy a little bit more. And then guess what happens? All those people who receive the unlocked tokens after a few days go, hey, look at the prices are going up. Better sell into this rally. And boom, they flood the market with these unlocked tokens. And so you have that bump up. And then all of a sudden, boom, it goes down again below what the day of the unlock. So that, if you're developing a trading strategy, that might be something to look out for. You see the size of the unlocks. And in my newsletter, I actually always show kind of some of the bigger ones that are like, more than double the daily average. And that's the reason why, because you have interesting things like that.
I need you, Lawrence, one day to do a psychology behind the market segment for us. We have another chart here. Yeah, we have another chart here that evaluates DeFi tokens by their market cap and fees. Talk to us about what this shows.
Oh, well, actually, this one, no. So this one, I before we get to that, I actually want to look at this one too. This is the same study from Sasha. Real quick, again, we're kind of looking at the volume. Another interesting that happens is volume kind of cuts down towards the days of unlocks, right? You see that, you see the decrease, and then all of a sudden the volume shoots up the day after the increase, and it's exponential for the larger tokens. So again, that goes back to we're talking about psychology. That's what that is. You see the psychology of people dumping those tokens into the market. So they're holding back a little bit when they have a large unlock, and then all of a sudden they're like, oh God, wow, this is too good to be true, and they start selling into it. So that's what that chart is. But yeah, you were talking about the let's go to the next chart, because we were talking about this chart. You just mentioned it now. This is DeFi tokens, and so the idea is, how do you value? This is separate from the other two we just saw. This is a different study that was done. So how do you price a DeFi token? How do you price a DeFi? How do you price DeFi coins? And so one idea is to use multiples of revenue, in this case, multiples of fees, or it serves as revenues for these tokens. And what's interesting to note is that there was a compression that happened a while ago, where prices relative to, so the market cap divided by the fees received, right, it compressed down to about 10x. Well, why is that interesting? 10x is roughly, more or less, where software as a service companies, how they value 10 times their revenues. So it was almost the same concept, right? That these DeFi tokens, these DeFi platforms, et cetera, were serving as software. And so in a way to value their overall, to come up with a market cap, it seemed that they were following the same pattern as things became more established. And it's followed the same pattern as software as a service. But look what's happening very recently on the right side of that. That chart, we're seeing some rich valuations relative to revenue. So it's breaking that pattern. We're seeing things like we see kind of like Uniswap is staying at 9 times its revenue, but then we're getting things like Compound is 27 times its revenue. The Graph 33 times its revenue. So it's no longer 10 and change. It's multiples of that. It's gone up tremendously. Again, people who are looking at relative valuations, that's one way to do it. If you're looking at it as a way to trade, and if you're a value investor and you somehow think that there's value in DeFi, okay, so which is richly valued relative to its revenue, that gives you a clue.
Lawrence, horoscopes for men. I love it.
Yeah.
This is definitely more than horoscopes for men. I don't mean to,
Yeah, as you know, I'm not a big. I'm actually not a big technical analyst, so this is a little on the fundamental side, but it's a way to look at it.
Lawrence, it's been such a pleasure hosting with you this week. Have a great weekend.
I'll try.
Thanks for watching. I'm Jen Sanasi. That's Lawrence Lewitton. We'll see you on Monday.